welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and my partner,
Hari. Hello. How's everybody?
How are you? How are you doing, Hari?
Feels like a month since we last recorded. So
I know. It really has been, I think.
yeah. So we just had churned through our entire backlog of things. So now we're getting back to it.
We're back into it now.
Yeah.
Well, we're starting off with a really good company, Footlocker. This was one of those companies that was suggested by one of our, actually a few of our listeners.
Yep.
So I think this is a good candidate to go over for this episode. So before we do that, can you give us a disclaimer, Hari?
Yeah. So the Value Investor TV podcast is here to educate you and entertain you about value investing. We are here to teach you the principles of value investing. We are not financial advisors. We don't know your specific financial situation. So if you need to make any financial decisions, consult a tax or financial advisor before doing so.
Okay, awesome. Let's get into it. Obviously, as you guys know already, we're going down a checklist when we analyze a company. Today, this episode, we're going to talk about Footlocker. But as with any company, we go down a checklist. And we made our own checklist based on our experience, our research, and other people's research. So if you guys want access to our checklist, please email us at info@valueinvestor.org or tweet us at info. Or I always get this part wrong. Tweet us at Value Investor TV, at Value Investor TV.
Yeah, and if you also have, just like the other listeners who have emailed us about Footlocker, you can send us an email if you want us to review a particular company or go over a specific topic, or if you just have any questions that you have, please email us. We love hearing from you guys.
Yeah, absolutely. Okay, should we get started, Hari?
Yeah, let's do it. So we're going to go down our checklist, and so Becco, kind of walk us through what does Footlocker do, and tell us about the company.
Yeah, I think if you're an American listener listening in the U.S., I think it's I don't have to go into too detail to explain to you what Footlocker is, because I think every one of us have seen it, have experienced it. So Footlocker is a retail store that sells footwear as well as apparel. They are located in a high traffic area, for example, in malls or streets where there are a lot of high traffic, foot traffic. They sell lifestyle brands, but also athletic brands. So Nike, Adidas, Puma, and lifestyle brand, more recently Fila, Champs, and a few other brands. They are basically a retail outlet for these apparel and footwear producers, manufacturers. So if I could give you some highlights on their footprint, they have over 3,000 athletic retail stores in 27 countries. So they're pretty, they're not just doing business over here in North America. They're doing business all across the world, 27 countries. They have a pretty sizable, they're growing their presence, as with any retail, right? As with any retail, they're growing their website and mobile presence. I think this is a common theme that we see when we analyze retail companies or even manufacturers themselves. They're trying to really push into the web space. A little color on the employees, 15,000 full-time employee, and then part-time 33,000 employees. And then just some color on the size of the company. So right now we are recording mid-August, and some of you guys have been following news. There's been sort of dip in the market. So right now their market cap is $4.25 billion, and their share price is trading at around $38. They're listed in New York Stock Exchange under the ticker symbol FL, and they're also listed in German Stock Exchange, Boris Stuttgart Stock Exchange as well. So those are some of the highlights, and we can go into more detail later on.
Yeah.
Does that
So
cover the
yeah,
basis?
yeah. That kind of gives us an idea of what we're talking about.
Hmm.
I think as we go through this, we'll probably get a better understanding of what they do and how they do it. But why don't we also talk about what we think their competitive advantages are and try and establish what their moat could possibly be? So,
Yeah, I think this. Yeah.
we'll walk down the list because I think it's easier so that we don't miss anything.
Hmm.
Um, so they're a big part of the sneaker culture, here in the U.S. and sneakers are something that have kind of taken over everywhere. But do they have a brand that is recognizable and that provides them a competitive advantage? Would somebody buy their shoes, say, at Footlocker versus Dick's Sporting Goods or Amazon or any of the other stores?
To me, the competitive advantage is not. I think they have some advantage, but I don't know if it's. I don't know if it's something that we could classify it as a moat. So, for example, um, Footlocker definitely is trying to create their own unique culture around shopping at Footlocker by becoming what they call themselves hyper local. So they're trying to brand themselves as a hyper local, culturally sensitive, you know, relevant with time sort of retail outlet where they're selling the most, up to date, the newest and the hottest goods out there. But to me, as a retail store, the moat itself, that moat, the sort of marketing and branding moat, is there, but it is not strong enough, in my opinion. For example, a customer buying from Footlocker or a customer buying from Adidas shoes and Footlocker versus buying from Finish Line or Amazon, to your point, there's really no difference ultimately to the end customer. And for them, they're trying to change that by having these cultural sort of blockades around it. But I'm not sure if I could classify that as a strong moat. What do you think?
Well, I mean, the only thing I can think of, and I am not as familiar with it as you are, is do they have any exclusives with Nike or Adidas or something like that? That if I wanted to buy this particular shoe, there is no other place to buy it other than Footlocker.
From what I understand, I don't think so.
Okay.
I think they definitely. They might. This is something that I could further look into. But from what I gather, and even if there was an exclusive, it would be very small increment to the revenue anyway. So I'm not sure if that's actually providing any sort of protective moat for their business. From what I see in terms of exclusive, I don't see that that is the case. But I think they're trying to combat that lack of sort of the lack of competitive advantage by having these sort of hyper local culture around them. Yeah.
Okay.
But going back to your question about competitive advantage, I think this one's kind of tricky because with for example like great Canada Goose. I keep saying Grey Goose, Canada Goose, Skechers. These are brands themselves. They make their own stuff.
Right.
Whereas Footlocker or Ulta, these are distributors and retail outlets that sells collection of these merchandise. So I think it's a layer removed from the content owner themselves. So how do you create a moat in this industry?
Yeah.
You know,
Well, one of the things that Ulta did that was, I think, pretty powerful was, they have a high loyalty rate because of their shopper, frequent shopper card. So there's a 90% of, I think, was their customers are, frequent shoppers there. So, they have a culture that's built around it, and then they use a rewards program to help you. And then they have, their beauty supply and salon built in. So it was kind of like a one-stop, shop here. Now, I mean, to some extent, Footlocker has that. It's, you can get your apparel and your shoes there. So you could basically, outfit yourself for that. But, I mean, I agree with you. Footlocker is I can go there. I can go like literally next door is Finish Line, and I can shop online. I can go to Dick's. I can go to, any number of other, stores to find similar items. So it's a little challenging for me to see that there's a moat. I mean, Footlocker has a well-known brand, but I don't know that it translates into an exclusivity with customers, right?
Yeah, exactly.
So let's talk about the other types of moats and see if they have anything that could be potential here. So
Sure.
network effects, do they have something that if people buy, they're more likely other people would come to that store to buy as well?
I mean, I could see an edge case where that could be possible. For example, amongst like small circles of high school students or, young, people in their low 20s, where it's like a hype thing where people have to go there to buy a certain product because every one of their friends are doing it, and so I have to do it myself too. So I could see like small, maybe a tiny effect, but it doesn't have a sizable material impact on the business itself, I think. What do you think, Ari?
Yeah, I agree. I mean, there's no real network effects here. I mean, it's more like an eBay or Facebook where, the buyers come because they're sellers and the sellers come because they're buyers, that kind of thing. You sign up for a social media because all your friends are on it, that kind of thing. So yeah, I agree with you. There's not much there. Switching costs. So is there, if I buy my next pair of shoes, now that I have Footlocker, if I buy my next pair, am I more or less likely to buy because I bought it at Footlocker before? How do you see that?
Yeah, I think that's a no.
Yeah.
I think it's easy to see that as a consumer. If I go to Foot Locker to buy a pair of shoes today, it doesn't lock me into buying another pair of shoes 6 months down the road at Foot Locker.
Right.
If the price is competitive, I would go there. If the price is competitive or the location is convenient for me, but just by the fact that it is Foot Locker doesn't draw me to Foot Locker.
Yeah. Well, and then here's to your point there, are they a low-cost provider of shoes and apparel relative to, everybody else in the industry? And what do you think about that one?
Yeah, I mean, these are, if you think about it from kind of value chain perspective, you have the manufacturer themselves. These are factory owners that are just printing out shoes, and then the next layer is the company's their own retail store. So Nike will have their own retail store. Adidas will have their own retail store. And then the third sort of bucket is what I call kind of Foot Locker type of the world, where you are getting material from the second and the first layer and then selling it in their own retail shop.
Yeah.
If you think about it that way, I mean, ultimately you have to make money somehow. So you have to add a layer of margin to those shoes that you're getting from manufacturers or the retail shops themselves. So I don't think they can realistically, mathematically, they can provide the lowest product. It's just not possible.
Yeah, and when we talked about Skechers, just to kind of emphasize, like, their related industry, footwear industry, Skechers would sell into retail stores, and then they had their own retail stores, so they were selling wholesale to companies. I don't know that Foot Locker carries Skechers, but other wholesalers or other retailers like JCPenney and Walmart and so forth were carrying Skechers. And Skechers saw better, money out of their own retail stores because they could offer a wider selection of their own stores. They had guaranteed shelf space because it's their own store. They can, stock it with whatever they want. So I mean, in some sense, Foot Locker is fighting Nike for Nike's stuff, right? And
exactly,
Nike's going to do whatever benefits Nike, right? Which is, if it's better to go sell through Foot Locker, they will. Or if it's better to sell through their own retail stores, they will, right?
Yeah, exactly. And you mentioned Nike. I want to bring up a interesting factoid here. So we'll go into this, but one of the things that Foot Locker and any retail store of this type, for that matter, is that they have to maintain a good relationship with their suppliers. If you look, Nike, you mentioned Nike. Nike is actually accounts for 66% of all merchandise. So think about that. Think about how much power Nike has over Footlocker. You
Yeah.
know, they're demanding 60. They're demanding a 2/3 of their business in Footlocker. So the power is very asymmetric here, and we'll go over this later. But it's one of those risks that we have to account for when we're analyzing this company. And
Yeah.
on the topic of merchandise suppliers, 90% of all merchandise come from top five suppliers. So we'll go into the detail later on, but I just wanted to point that out since you mentioned Nike.
Okay, so let's now that we have talked about the competitive advantages, which we've basically said there aren't really anything strong. Maybe the brand is there. Maybe that's the only real value that we can say is driving traffic to Footlocker. How durable is the advantage? One thing we should say is if you have 3,000 stores, you have a very local presence pretty much anywhere you go, and so that is its own advantage. But what are the risks given the current retail climate that we have? More people are shopping online. More people are avoiding malls. There are lots of stores that I'm sure Footlocker has in lower or declining traffic areas. So, how durable do you think this advantage is, and how could that potentially erode sales and earnings?
Yeah, I think you bring up a really good point, and this is the point that all the retailers are grappling with right now. How do you deal with the online? How do you deal with, especially because Footlocker is targeting people in their 20s in this footwear culture, and this group of 20s and teens, they're hypersensitive to the trends in the apps and mobile trends. And so how do you grapple with that in the age of Amazon, in the age of 2-day shipping? So I mean, you bring up a good point. Are people going to go out shopping in the future? That's something that Footlocker has to account for. And one of the ways that they're trying to combat this is by saying, we have a lot of retail outlets already. Why don't we retrofit them and make it better so that we can attract more customers? So what they're doing is they're changing their store format into what's called Power Store. So it's a kind of premium retail design where you have these. It's not like a conventional Footlocker. It's more of a premium sort of store where you have premium sneakers and apparels, and this is directly from their 10K, designed to inspire youth culture and connect to and celebrate local communities. And so I think, again, going back to the question of how do you grapple with changing trends in shopping. They're of course pursuing the mobile and web side of things, but also on the retail side of things, they're changing how they're structuring their retail stores so that they can attract more patients and also to sell higher quality premium brands so that they have a higher margin business in physical brick and mortar retail stores. And I guess to your question, in terms of competitive advantage, durability, it's low. Yeah, I think it's low. So that's why I think there are all these initiatives that they're starting to roll out to combat that.
Well, I mean, it's always challenging, right, in retail stores to have, you're either the biggest player in the space, you're a low cost provider. Footlocker doesn't seem to have that as a competitive advantage in any of those things. So, I mean, I think what we're both saying here is that there isn't much, really, right? You are kind of at the mercy of the market, and you could be taken out by Amazon. You could be taken out by unlikely to be another footwear retailer. But I think your challenge is always going to be people just pick your store and then they go somewhere else. There's not a real loyalty to the brand. So,
yeah.
Okay, so like looking at this, what do you think is the long term prospects for growth? And do they have a long runway, to continue growing? I mean, they're at 3,000 stores, 27 countries. Are there more opportunities for growth, by opening up more stores?
Um, so they are closing down some stores that are underperforming and opening new ones, and also retrofitting some existing ones. In terms of the runway for growth, let me give you some color on 3,000 stores and then 27 countries. So in the U.S., as of February 2nd, 2019, about 800 stores. In Europe, about 600 stores. In Canada, about 100 stores. In Pacific and Asia, about 100 stores also. And then there are other. Footlocker Inc. is what we're talking about. In Footlocker Inc., the parent company, there's also a subsidiary called Lady Footlocker, Kids Footlocker, Champs Sports, Foot Action, Runners Point, Sidestep. There's these other subsidiaries which all combined make up the 3,000 store footprint, and they're everywhere. Like I said, Europe, U.S., Canada, Asia, and they're expanding into other Asian markets. So, for example, China, they're partnering up with Tmall to distribute their products. But again, it begs the question of, do they really have a competitive advantage there if Nike can sell directly to Tmall? Like, why would a retail store partner up with a retail store to sell a product, right? But to your question, in terms of runway for growth, I think they're sort of at reaching the peak here.
Okay.
They're grown to quite a bit of size. I mean, last year, let's look at their growth rate. Last year, total sales was $7.9 billion, increase of 3.3%, and comparable sales gain of 2.7%. So they're just eking, little growth just above inflation. And I'm not sure how long. I mean, we're kind of seeing the tail end of this already. So,
Okay.
the answer to your question, I think it's pretty limited.
Well, so how does that, how do we look at it from a capital reinvestment perspective? Do they require a lot of money to, it's a mature business. How much money do they have to spend to maintain their operations? Could they potentially grow without investment or reinvestment?
Yeah. So let me give you kind of rundown of where they're putting their money in terms of CapEx.
Yep.
So they're putting their money into a couple things. One is digital and logistics capability. So what that means is, let me give you the exact quote: updating digital platforms, relaunching our mobile apps, testing the potential value of RFID, rolling out new point of sale software, groundwork for innovation, a new membership program. So that's what is defined as digital and logistics capability. And the other prong of this investing is new store model. So this is basically what I said earlier about Power Store. So this is meant to serve as a hub for sneaker culture, art, music, and sports. So they're putting their money into digital infrastructure, basically digital infrastructure, distribution, and then better store outlet. So those are two places where they're putting their money into. So in last year, if you look at their CapEx, they spent about $187 million into the business. And then in 2019, this year, they're planning on spending $275 million, with really key focus on key focus on the second aspect of that capital program, which is the Power Store, getting these new store up and running.
Yeah, how are the power stores doing? Can we do we have any idea how? So they're spending $275 million on this power store concept. Have they piloted it yet, and have we seen any results from it?
Yeah, they piloted it. Let me pull up the exact. So they piloted it in the first location in the U.S., And they're also going after a few places in Asia as well. And
Okay.
as to the results of these power stores, I haven't been able to find um, specific results about around the power store. But it
Okay.
seems to be their big drive here, and I
Mhm.
think this relates to their objective, their long term objective. If I could just paint more color on that. So the Footlocker executives, this is sort of their 5 year vision. This is sort of the strategic framework that they're using. It's 5 C's. They call it 5 C's: collections, content, community, connectivity, and convenience. And so these are sort of top 5 C's, they call it. New customer connected strategic framework is what they call it. I think this is aligned with what they're trying to pursue here. It's a hyper local. It has good content with arts, with the collection of art, music, this sneaker culture, trying to establish this sort of community and convenience. Now the question is this going to drive revenue, more revenue, directly or indirectly? That's a question, and
Yeah.
I'm not sure. I don't know the answer to that question.
Okay. So right now they're attempting to grow, which may or may not be a good thing depending on, how this turns out, right?
Mhm.
Okay, let's kind of look at their relationships because we had alluded to this earlier. How do they have relationships with, or how are their relationships with customers? We've seen, or doesn't seem to be any loyalty, but doesn't seem to be, is there any problems? I guess.
Yeah, I don't see any. I don't see any glaring problems. I'm sure, in stores here and there, I'm sure there's some problems with management and stuff like that. But overall, I don't see any glaring issues
Okay.
with customers.
All right. How about their suppliers? So we've alluded to that Nike is a majority of their revenue. So what do you see that as a problem?
Yeah, I mean, I mean that's a really interesting kind of power dynamic, don't you think?
Yeah.
I mean, 2/3. We're talking about. I mean, Ulta. If we compare this to Ulta, Ulta has collection of beauty products from all kinds of manufacturers, right?
Right.
Whereas Footlocker, you're talking about 2/3 of their entire merchandise is coming from one vendor.
Yep.
I mean, they wield some great power over Footlocker, in my opinion.
No,
And
but it does work both ways though, right? I mean, you would see that Nike also wants to make sure that if, they're selling $5 billion worth of apparel and sneakers at Footlocker, that's Footlocker is happy too, right?
sure, let's see, what is Nike's revenue? Let me just do a
Oh,
quick.
it's in the, I think it's close to like 50 billion or something like that.
Yeah. So in terms of, I mean, they are dependent on Footlocker, but not to the extent that Footlocker is dependent on Nike.
Yeah.
And if I look at some other statistics around suppliers, this is something that I mentioned already. 90% of merchandise is coming from top 5 suppliers. So dependency there is quite high. It really depends on their ability to obtain premium quality product from these merchandise from these stores,
Right.
not stores. Sorry, these producers.
Okay. So, there's potential risk there that, Nike or one of the other five pulls out or, has a problem or, change in their brand could potentially have an impact on Footlocker.
Mhm.
So, any problems that you see with their relationships with their employees?
Not that I can think of, not that I can see. As I mentioned in the beginning of the episode, I said 15,000 full-time employees, and they have a lot of part-time employees, 33,000.
Yeah.
So I don't see a problem here, but it, you know, there possibly hidden problems here and there when you're dealing with that many employees. I'm sure some problems here and there, but overall, I don't see a major issue.
Okay. Well, that kind of brings us to the end of this, part one here. So, we've looked at kind of the business, the overview, and what we think could potentially be a moat for Footlocker, which, I mean, it doesn't sound like there is a tremendously strong, moat here. It's kind of a relying on their brand, which doesn't carry too much in weight. But when we go into part 2, we'll talk a little bit more about management, valuation, profitability for the company, and is this, despite there being no moat, could there potentially still be a value in this company that or a significant margin of safety for an investment?
Mm-hmm. Yeah, I think that's a good point to end this episode.
All right. Well, thanks a lot. And I guess we'll see you guys on part 2.
Great. See you guys later. Thanks.
All right, thanks.